Okay, am I the last presentation?
Yeah, you're closing out the day for us and closing out the event.
I'm wrapping it up.
For us. Yeah.
We seniors, we're wrapping it up today. Thank you, David, for having me. I wanted to address seniors because I know if I took the 6 o'clock spot that we've probably already eaten dinner at because it is 6 o'clock, and early birds, they start usually 4:30 or 5, figuring my audience here is either finished or they're on dessert, but either way. And we don't have coffee late at night because we can't go to sleep. All right. I want to thank, I see that somebody either likes my sense of humor or doesn't. Oh, it's midnight. Well, definitely don't have any coffee, Frank. How you doing, Frank? Okay. I want to, I'm excited about this presentation because I really do think that if what you see today fits, I really would like to take advantage of the offer I'm going to give at the end, because I really do think that there's a lot about prop trading that fits senior citizens. I mean, if you can get past the senior citizen shouldn't be trading the futures market, and of course that's a risk. What I'm about to show you is certainly not a guarantee of anything, but you know, if you have been sharp enough to trade in the past or consider it in the past, and you can learn. I think we all, you know, I think they way underestimate senior citizens and what our capabilities are and our advantages really as senior citizens. But I'm going to go through this presentation, and I will point out some of the things that I believe fit seniors very well and some that don't. But rather than talk about it, let's just get into it. If you don't know who I am, my name is Norman Hallett. I've been trading for the better part of 4 decades, or 3 plus. No, I guess it's 4 plus. The first part of my career was involved really in the option business, and then I ran a very large option firm, and then moved over to Payne Weber after that, the option firm, International Trading Group. This is before there were exchange traded options. We're actually buying and selling options from a private company, that one of the biggest in the world, Mercado Metals, out of London. So it was a little bit different kind of thing, but the option premiums and stuff worked the same. We couldn't be quite as fancy as you can be now with options. But and then I got into writing trading plans for some of the traders that I was overseeing that didn't seem to be able to produce profits on a steady basis. So I would learn a little bit about each one of them and help them with constructing trading plans. I've written several books on it. This one I think is still available on Amazon, and started my own after a couple of years with Payne Weber as a commodity specialist, which really wasn't an enjoyable. It was more sales than anything else, which really surprised me. I'm much better trading than I am at selling, which you'll see in this presentation. Hallett Group I couldn't think of a better name, so I used my last name. I was a commodity trading advisor. For about 5 years, I was trading $250,000 plus accounts for qualified investors, and would earn 20% of what I achieved of the profit. I cleared through my own IB, which gave me a little bit more income from a commission standpoint of my own trades. And but the last 20 years, really, I have focused primarily on the mental and emotional capabilities of traders, because that's the real huge missing link. And what you're about to hear here, when I show you a little bit about the trading plan that I use to pass the prop tests, I try to include in these in a trading plan features that make it easy for you to stick to the plan. Doesn't mean that you shouldn't be training your mind on a regular basis, because you should, but it's a lot easier if you have a trading plan that's built to follow it, as opposed, I'm going to show you a couple of examples of what I mean here, but let's keep going. I want to give you a promise today. I'm going to lay out the pros and cons of prop trading as it relates to seniors. And by the end of the presentation, you'll have a clearer idea of whether prop trading is for you. Now, prop trading, if you need a definition, is really where an outside entity, usually a hedge fund or a firm with the money to do it, will actually allow you to trade their money and reap 90% of the profit. Trade their money, 90% of the profit. In fact, with Apex, which is one of the firms I'm going to show you, they'll actually give you 100% of your first 25,000 in earnings. And why do they do that? How can they give you 90% of the profit and only take 10? Well, that's not where they make their money. They make their money on the 90% of traders, seniors or not, that can't seem to pass the test. There's a monthly fee, and I'm going to show you what that fee looks like. There's a monthly fee that every month, as you're trying to pass the test, you got to pay them their due, and that could be anywhere from $150 all the way to $500 if you're testing for a $500,000 account. So, and it's a doable thing. I'm going to show you how the best approach to it if you've been trying it on your own, but just keep paying the monthly fees and the reset fees. If you blow out an account, if you break the parameters, the rules, you can reset the account for a measly $80 or to $100, depending on which firm. But that measly, again, it adds up. And so I'm going to show you some of the numbers and what that looks like and some of the advice that I have for you, whether you take my advice or take my offer at the end or not. So I want to make sure that you have a pretty good idea of how this all works. Now, prop trading, is it a perfect fit for seniors? Well, as I mentioned, prop firms fund the account, you trade it, and you earn 90% of the profit. Well, it's their money and their risk. That's a pretty good deal for anybody, including, listen, when I look to my earning power from this point on, I see it as good, but I don't see it forever anymore. You know, there's only a few kind of years that I can earn, and you know, and a lot of seniors are retired and they're looking to trade for another stream of income. And hey, if you use their money and if you lose, it's their money that you lose. That's a pretty good deal. Okay, so I think from a risk standpoint, for seniors, it certainly makes sense. The ability to trade a large account, which would not be possible for many seniors. I mean, it's really nice to, you know, if you spend your life trading the E-mini S&P market, it can get old pretty fast with the because you're really not making a lot of money. It's really hard to make even $1,000 or $2,000 a month, which is what most of us want to do at least, right? Maybe you can make 500 or something, but still that same effort can be used on a $25,000 account or a $100,000 account, and not be limited to a $5,000 account if you're somebody who doesn't have a lot of money to venture into alternate means of income. So the ability to trade a large account, you'd be sitting there trading $150,000 or $250,000 account. If you can trade, you got to prove to them that you trade. So these kinds of numbers are not possible for a lot of seniors, a lot of people, but it's certainly possible. It's the carrot that they hold out to you, and it's a real carrot. If you're not a disciplined trader, the testing phase is a money drain. I'm going to emphasize it again. It's not because it's my love and what a logo is and what we're all about in one respect, but if you're not a disciplined trader, see, the thing is that they set up rules that only a disciplined trader could follow. And I mean, it's true of any trading plan, but especially when they put extra parameters on there. They're doable. They make your trading I'm going to call it ultra conservative to a large degree, but that's a good thing, because if you can learn to do that, I'm going to show you some of the tricks of the trade here of doing that and how I did it. If you can be disciplined, it's not a money drain. I mean, if you can pass trading a $50,000 account in 10 trading days, as I have, so make it 15 or 20, that's a month. You won't be paying those monthly fees. You pay the first month and that's it. Maybe 2 months if you need a little bit of practice. But in the end, you're going to have to be disciplined. And when you trade with scared money, it's harder to follow your trading plan. It's easier with somebody else's money. It's easier to spell else's correctly with the apostrophe. I guess it's harder. That's why I spelled it the easy way. But when you trade a scared money, you know, when a senior puts up $5,000 or $10,000 in the futures market, you know, that's all they've got to speculate with. That's scared money, and it's really hard. It's much harder to follow your trading plan. You miss trades because you're a little bit, you don't want to lose, and there's a lot of fears that go on that get emphasized. So when it's somebody else's money, it could be a good thing. So these are some of the reasons, and I'll mention one or two along the way. Then I think that seniors, for many seniors, including me, it's a perfect fit. Okay, I got funded, and you can too. Here's my Top Step pass. Now, Top Step has a 2-step passing routine. It's the same process twice. Apex, which most of the traders that turned me on to it, I'm talking about traders on my list that were asking me questions about anything special that they should be doing in the testing phase of getting funded. They all seem to be on with Apex. This seems to be these are the two top, and you'll get paid by these people. They've been around for years. So this are the two entities I'll be talking about. But there's a big drawdown. They both have positives and negatives with their rules, and I'm going to let you look at them with some depth. It's not complicated, but I'm going to point out the one big rule that makes Apex a little bit tougher to pass, although you only have to pass once. And if you're disciplined, you might as well do that, because you'll get through more quickly, because you got to do the same thing twice with Top Step. Okay, so let me, in this particular case, I tested for the $50,000 account. I also I'm working on a $150,000 account and a $250,000 account. And I'll give you a reason why I have multiple accounts in a second. But I wanted to pass the $50,000 because each one has its a little bit different parameter. But I wanted to pass the 50 because that's where most of my traders on my list start, at about the 50. Okay, but you can start anywhere. Okay, I'm gonna just let you gaze at this for 60 seconds. This is Apex's offer sheet to you. You can choose. You can start on any of these, but I'm gonna just shut up. I'm gonna let you view this just for about 60 seconds. All right, somebody asked a question, which platform? Apex demands that you, well, I think Apex actually will let you trade on most platforms, but it won't let you trade on TradeStation. I had to learn NinjaTrader, and I believe on Top Step, they're the ones that forced me into NinjaTrader, and Apex accepted it too. I did Top Step test first, and then I did the Apex testing. So NinjaTrader is the platform of choice, but Apex will allow you to trade on other platforms also. All right, let's take a look at the 50,000, and I'll think Fidelity Interactive Brokers. I'm not sure. You'll have to ask. I'm sorry. Let me just. I'm going to cool it with the chat until I finish this part of the presentation. All right, 50,000. You're going to start with 50,000. This is what I'm trading right now. And I'll just show you. I just passed it last week, so I've only got a few trades in, but you can trade as many as 10 contracts, meaning that you can trade 10 golds, 10 S&Ps, and they count the micro contracts as 1/10 contracts. So literally could trade 100 micros. I mean, why anybody would want to do that, I don't know. I guess if you're a scalper that scalps for 1 or 2 points and somehow you have a system that does that, you need a lot of, but I don't know. That's plenty of contracts. I have not put on, even in the 50,000, over 4 or 5 contracts, I think, at one time. The profit goal is $3,000. You've got it, and once you earn $3,000, you pass. But you can't do it in one trade. They don't want lucky traders. So I believe that something like 35% in Apex, 35%. You can't have one trade that represents more than 35% of the. You can have a day that does that, but not one trade that represents more than, say, $1,000. There are rules. There's a rule in that respect, and I know that in Top Step it's 40%. You can't have one trade 40%. That's a good rule. You know, you don't want, because you're not going to do you any good if you can't walk your way through profitability. Then you're not going to last much longer anyway. So but you got to do it before you have a drawdown of $2,500. So you got to earn 3,000 before you come down to 2,500. Okay. But I want to describe here, this is the big difference between the two: trailing stop, the trailing threshold. In Top Step, I'm going to show, well, let me show you an example. I'm going to go to the other page in a second, but you can see that this is almost a 1-for-1 deal. This is almost 2 to 1. Okay, you've got to make almost about 1.6, 1.7 times what you can lose. Here you got to make twice. Okay, here you got to make. This is why I chose the 150 over the 100, because it gives me a little bit more room on the bottom, but it's 1.8%. It's not quite two times. This one is twice as much. So I thought that was a pretty good ratio. And then and I also am working with a 250. So I have a 150 and a 250, and I've already passed the 150, and I'm concentrating now on the 150, where I have to make 5,000 before 9,000 before I make 5,000. Now look at this. These are the monthly charges, and they run a lot of specials, so you got to watch for them. Do the learning first, and then grab it, because if you're watching for a month or two, they'll have a special more than likely. So these are the monthly charges that they get you for every month. This is how they make their money. Okay, let's go into the big difference between the two. You got to understand, because this is where traders have when I explain this to those traders that were interested, just to my list, they were surprised. They really didn't realize this. Top Step, as I mentioned, has a 2-step test, and Apex has a 1-step test. All right, in Top Step, you testing for $50,000 account, and it's the same $2,500 that you can't. Once you lose that, you've got to reboot your account with $100, $99, and then you can start again. You can try as many times as you want, as far as they're concerned. You can try on a daily basis. I mean, if you're down $1,500 in this account, at some point you say to yourself, "Oh, why should I have to get over the 1,500 just to make the next 3,000 when I can just reset the account and wipe that 1,500 out?" So you wind up finding different ways, if you're not good at this, to continue to give them fees. Okay. All right. You were testing for a $50,000 account. Let's say that you have open trade equity. You have an open position and you're up $1,000. And all of a sudden, for the meantime, it's not closed out. It's not a P&L yet. You have $51,000 in your account. Well, you do let that profit go, and you close out your trade at break even. Well, your trailing threshold remains 2,500. I mean, you didn't lose anything. It's judged on closed trades. You close your trade at break even, so you still have that same 2,500 that you can reduce down to. Okay, in Apex, it's a little bit. It's a hugely different story. Okay, Apex, you've got $50,000, same account, same trailing threshold. Same trade that I talked about, where you have an open trade equity of $1,000, same closing out of the trade at break even. And yes, you now still have, as we have over in Top Step, you have $50,000 still in your account after you close out the trade at break even. However, the trailing threshold is now $1,500. Why? Because they count the high of an open position. They want you to take money that you earn. They don't want you giving it back. This is kind of, you know, when I had traders that I was coaching or supervising at whether it be Payne Weber or international trading, this was a big thing with me, that if you can learn not to keep giving back what you have. Listen, if you have a good trigger, you're going to get off to a good start on the majority of trades. Let's say 2/3 of trades. You'll get off. What you do with it is up to you. You know, having a big start to a trade and thinking, boy, this could be the big trade, that's going to kill you. You know, you got to find a way to be able to take that low-hanging fruit when you get it. And I'm not talking 1 or 2 ticks. I'm talking a trade like this. So I'm going to go through that just a little bit in the hour here that we have. But know that with Apex, if you have an open trade equity and you close at break even, they're going to count that against you. You do this 3 times. So if you do it a second time and lose another 1,000, and then a third time, you're going to be out with 3 trades. So you need a trading plan. If you take nothing from this and you don't take my offer at the end, just know that you need a trading plan that can grab profits as well as give you the ability to let a trade run. And I'm going to show you how I do that. Okay, a big difference. I hope you understand that. Can somebody give me a, hey, I understand the difference? Just give me, because I can't leave this page without, are there daily targets? There are no daily targets. What instruments will Apex allow you to trade? Just about all of them. Not true of Top Step. They're much more limited. For instance, in Top Step, they won't let you trade a micro gold account, which I don't believe why. I love gold. But in Apex, you can trade, and they have a listing of them, and you can take a look on their site. Okay, those are the quick questions. So what do? So the Apex remedy, how you offset this. I mean, listen, if you only have to pass once, that's a terrific thing. So you want to try to follow their rules and get it done. Okay, start with multiple contracts and scale out. That's going to help you conform. I'm not going to say beat. You know, it's not. Listen, I mean, when are you going to be able to get $100,000, $250,000 and get all the 90% of the profit? They got rules, and it's okay. You may not like them all, but if you have a trading plan like I'm going to show you that follows it, you can make this happen. Start with multiple contracts and scale out. The other remedy is if you can only take one contract. Okay, if you can only take one contract, make it a scalp. Okay, I'm going to show you a system where every time you put on a trade, you're going to put on 2 positions, 2 contracts. And if you can't, I don't like doing it. But if you force yourself and you really like the trade, but it's got too much risk for 2 contracts, and you only pay one contract, treat it as a scalp. Okay, treat it as a scalp. Okay, and when I say scalp, I'm not talking about 2 or 3 points. I'm talking about more, a considerable amount. I'll show you exactly what that means with some examples. Here's my 3 accounts. I want to just show it to you. I didn't show you, of course, my account numbers, but here's the one that this account is a funded account. I just started trading it this week, but I've been focusing on I'm up a few $100. I'm up $379 toward my. So I've earned $300, $325 in my pocket here, but I'll concentrate on this a little bit more next week, because I believe I'm getting very close to passing this right here. This is the $150,000 account that I got to make $9,000. This was taken a couple of days ago. I'm another 500 to the good. So I'm at 155.5 right here. So I only need another 3,500 to pass this one. And this one here is the 250. You can see I've hardly put any trades on it, but I got a good commission deal. I got in during one of their specials. And so I took all 3 contracts at the same time. Why do I have 3 contracts? Because if you're good at this, you want several of these contracts. You can make them all 50s. Because if you do blow out one of these accounts, if you qualify for all three accounts, let's say I qualify for all three, which I will, and when I do, let's say I'm trading and something happens, I break a rule or I leave a position on, I forget that I have a stop on and it gets stopped out while I'm getting something and it's the end of the day. You got to be out of positions at the end of every day. If you're not, that's breaking a rule and you got to start over again with the testing, okay? If I break a rule in one of these accounts, I still have income in the other two. So I'm thinking long term, a longer term, okay? I'm not looking at one and then, you know, depending on that and then having something happen where you bust out the account, you got to spend another 10 days to qualify and until you can earn money. No, you qualify for 3 accounts and you're going to have a stream of income with the other 2 while you're qualifying for the one that you busted. I think that's pretty obvious. It's why I do it. It's why a lot of people who are doing this prop trading is doing. So you can see I continue to do well and will because I have a trading plan that honors their system. Now, this is just put this up recently, I think last month when I first started, they called it Apex 2.0. But this gives you an idea of some of the rules. They'll give you 100% of the first 25,000 once you qualify of the profit. There's a 7-day evaluation. What that means, and they say tons of people are getting funded, and there are. I think there are thousands of people that are getting funded, and they've given. I saw an interview where one person earned over $1 million last year from Apex. So they're paying their funding, but you can't pay, you've got to take more than 7 days to pass the evaluation. Okay, you have to take. Again, they don't want fly-by-nights, lucky traders. They want a steady stream. They want to see that you can trade over time. So you got to spend at least 7 days. Took me 10. Only 10 days for the first and ongoing payouts. In other words, some of these firms pay on a monthly basis. Some of them pay, but they pay. They pay twice a month, and they have only 10 days from the first and out. So once you qualify, you only have 10 days till you can ask for your money. There's a little bit different in each. The important thing is they pay twice a month. You request what you want of your money, and they pay it on a particular Friday. And if you miss it, you got to wait 2 weeks. Okay, full ration micros. What I mentioned that before, that Apex will treat a micro contract as a 1/10 contract. So in my example where I showed you a $50,000 or $50,000 funded account, they'll allow you 10 positions, but 100 micros. Again, you'd be crazy to do that, but one-time PA fee is an option. They just put this in. Here's what that is. When you qualify, you no longer pay the monthly fee. That's what 160 or whatever it was that you qualified for. But once you do qualify, they're still paying for the fee, the data feed. They're paying for that, but you've got to pay for that at 80. You pay $80 a month to them. Okay, or you can pay $80 a month to them, or you can pay $140 upfront, and that's lifetime. I know it sounds crazy. Why wouldn't you pick lifetime instead of paying $80 a month forever? I mean, the reason is because most traders who qualify are lucky to have qualified, and they won't make it past the first month or two. So they get $140 from traders who have big ideas about their skills, but their skills are not really there. So they're going to grab another, $50 or $60 because they probably won't get past the first month. But so it's $140 if you can do this and you're good at this. $140, and that's and no more fees. Okay, that's how I understand it. And I haven't lived it, so I won't put my total stamp on it, but that's the way the material reads. You need a frequent, reliable trigger. All right, here are the keys. You need a frequent, reliable trigger. The faster you qualify, the less fees you'll pay. Okay, that's important to us seniors. Okay, we don't want to pay, we don't like fees. A good trading plan will likely have more winners than losers, so a higher frequency of trades makes sense. Look, if you have a trading plan that has a reliable, profitable, trigger that reliable means it goes in the direction soon, right after you put it on, or soon after you put it on, within a few bars. If you have one that happens frequently and it's reliable to get you off to a good start, you want to take as many trades as you can because you want to get there as fast as you can. Okay, so still It's more important, though, to have a trading plan that wins over time than forcing frequency. You don't want to go to an A or A minus or B plus rated trade that you've rated yourself by its frequency, that you back tested how it works, but you want to stick to your A plus trades. You want a reliable trigger. You want to find that A plus trigger. You want to go back in your trading or start now and analyze and see which of your triggers gets you off to a good start. Okay, and has a follow through. Those are your A plus triggers, and there's an environment that a trigger appears in, and you've got to consider that. That's not for this session. That's for the training videos. All of our training videos for this, for what I'm going to show you for the simple trading plan that fits this. You can see them all in 2 or 3 hours. You know, so it's not. When I say simple trading plan, it's simple, but the rules, the processes and the rules for the trading plan are very defined. One of the things that you need to do is find an A plus trigger, and we show you. I'm going to show you one here. There's a couple of them in the plan, but you got to find your own A plus trigger, and you have to have the patience to wait for the trigger. Okay, you don't want to just continue to take trades. This is the key. You want a reliable, frequent trigger. So if you can find that A plus trigger that occurs frequently, and that frequency can occur in one market, or you can, as I do, I'm looking at 4 or 5 different markets at a time in my screen, and whichever does the 2-bar setup, I can see and I can take advantage of the trigger. But you have to have patience to wait for the trigger. And sticking to the A plus setups means fewer trades, more profit, and yes, for us seniors, less transactional costs. Okay, fewer trades, more profits. Okay, just makes sense. Okay. Always start with at least 2 contracts, treating one as a scalp and one as a swing trade. Okay, if you're trading with 3 contracts, always favor the scalp side. Then scalp 2, the way I'm going to show you, and then use one as a swing. Not, I shouldn't say a swing trade. It's a day trade because you're not holding it overnight. Okay, it's a day trade, and it's out at the end of the day. Okay, and if you put on 5 contracts, then you want at least 3 or 4 of those contracts being scalps, and the second one or the other 1 or 2 being day trades where you can get what I call lewd and lascivious profits. Okay, so again, when I say scalp, I don't mean 2 or 3 increments. I don't mean, you know, gold going from 1,700 to 1,710 cents, 1,720 cents. No, I'm talking about 8 or 10. I'm talking about $1.50, $2 on a scalp. You know, I'm not, when I talk about scalps, I don't mean, I see a lot of people with these very short scalps. If you have a good trigger, you should be able to get a little bit more extension. And of course, the more you ask from a trade, the less you're likely to get it back. So that's again why and it takes, of course, you can see how scalping takes advantage of not giving back. You're catching things on the upswing rather than the downswing. Okay, here is a frequent reliable trigger that's one of the triggers that we use in the simple trading plan I'm going to show you. It's a trigger. I'm going to check. We've got about halfway to go. So I'm going to show you some examples. Here is it's a 2-part trigger. I call this the hesitation candle, and I call this the extension candle, hesitation and extension. When it extends through a particular moving average, I'm not going to disclose what those are. I don't want to mislead you, or we have specific ones in specific situations, but we use an EMA, not the standard moving average, but the exponential moving average, because it pays more attention to the more recent bars, gives more weight to them. But when you have a candle, let's see what you have here. Well, I see I'm thinking, can you leave open positions? No, you can't. Yes, intraday, yes. Yeah, no overnight. So when you have indecision, it means the market, when you have this kind of a small body where the open and close are about the same. In the green candle, if you don't know candles that well and just starting, in this candle, the body is this big green thing. And if it's green, it means the close is above the open. And this is the opening and closing range here. And the body is comprised of the open and closing range. And these wicks are the trades that occur outside the opening and closing range for this 5-minute period. Well, here you have where your opening and closing range were almost the same. A doji would have been the same. Market can't decide what to do. Well, it made a decision here. Looks like it made a decision for the most part and goes through one of the moving averages that we suggested. And having done that, it kind of gives the movement some thrust. It supplies energy when it goes through this moving average. Okay, and I'm going to show you a couple of examples. Now, what I do is, again, I buy a minimum of 2 positions, and in my examples, I'm going to talk about 2 positions. I buy 2 gold here. Let's say I buy 2 gold. As soon as I buy 2 gold, and how do I buy it? I wait till this candle closes, and as soon as there's a trade in this next candle, I go to the market and buy 2. Okay, then I put my stop in, whichever is the lowest of the 2 in the formation. I put a stop in below 1 tick. And the next thing I do is I put my limit sell in for the scalp. I measure the body and I extend that same distance in the right direction. And that's where I'm going to take my limit sell. So I'm expecting that the length of this body will be duplicated in this trigger. And once I take that scalp, I move the stop on the remaining position to break even. Okay, so buy 2, stop a tick underneath the lowest one, measure the body, put a limit sell in for your scalp position. Okay, and then when you're hit on the scalp, move your stop on the original position, on the remaining position to break even. Okay, and then ride the actually, you know, this line should be drawn probably this way. If it's going, it's more likely that we're starting to move higher. But if we don't, it doesn't really matter. It happens this way too. Let's look at some charts. Are you ready to look at some charts? I mean, I just want to get a little action here. You ready to look at a few charts? And I'll show you some. This is really from yesterday, the day before. They're not, I couldn't clip for today. I like to show charts for the day. Okay, let's get going. Here is, let's talk about, I do want to talk about scaling out just for a second. And just in case you've traded more than 2 positions, if you here right here, for instance, is a signal. Here is a, you have the hesitation. There's 2 moving averages. Forget the white one. Okay, the white one is not. The white one is what we call a guardrail, and I can't explain that to you right now because it's not in the basic formula, but we've added it recently, and it's proved even more the take. So, but I want to show you this right here is the moving average. It's probably the 8 or it's probably, let's call it the 8-bar exponential moving average. Again, I don't see the commodity and I don't see the, in any event. But look at the system. We have here a quiet bar, the hesitation bar, followed by a moving bar through the moving average, the golden moving average. Okay, the first thing that we do is we put our stop down here below the 2. This is the lower of the 2, so we put our stop a tick below. We measure the body here, and we put our stop in. We put our limit sell in here, and we would have been sold out. We would have been scared right here a little bit, but it came right back. And we would have been out right in this area. And for the remaining position, we would have ridden that up all the way to this reversal, which is a reversal signal. Same thing, hesitation. There are some of us that would have, and I'm going to show you this, got out here. You don't want to move too far from the moving average, because it always snaps back. But for this example, you can see how this would have worked. Buy 2 here, we would have sold 1 here, moved the stop to break even, and we would have gotten out. In this particular case, there's a very slick and exciting exit strategies that we use. This, of course, is one of them if there's a reversal pattern, but this is, I'm lucky to have one here in the first one. But I want to show you also, if you take multiple positions, you want to look back at this market was coming down. This was a series of lower highs, right? So this was a downward movement, lower highs. And so here's an area here where I would want to take a scalp because these become resistance on the way up. And then if I took 5 positions, I would take my normal scalp. Maybe I'd take 2 right here, and then I'd take 1 here, and then I'd take 1 here at the next previous high. So you want to, I only show you this to encourage you to be taking the scalp, but you want to leave one to run, at least 1 or 2, depending on how many positions you have, because this is really where you make your money. In this system, the scalps will offset the losers, plus a little bit. You'll get a little bit, but the real profit in this system is made on these runs. Okay, so let's take a look at what tight risk parameters. Okay, because I think it's important to go by some of those things that I asked you to pay attention to before. That's important for seniors and everybody. Okay, so let's take a look at this right here. Is this a signal? You've got a quiet bar, an indecision. Again, it's either a spinner or, I'm only looking at the body now. It's either a spinner or a doji, and then a movement south through the moving. We're looking at the white moving average right now through the EMA. This is a signal, but would one take it? Well, most may not take this. They trade this, only the very big accounts, because the risk is too big. The risk is too big. And there'll be plenty of times where you'll have a much more reasonable. I'd rather wait for a signal like this, where I can take twice as many positions with the same risk as here, if you catch my drift. So when it's too big a risk, on a $50,000 account, I don't take this, but you may want to, but the thing is that with these big moves, you will see, this is a losing position if you did take it, right? We would actually, with our system, you would have been out in this area, right? You would have been actually right here, you would have been out. So you wouldn't have had a full loss, but there are traders that just take every signal that they get like this, that has this particular trigger. Okay, and they're doing fine. And it's just when you have a frequent trigger like this, you've got some choices that you can make. For us seniors, we need to stick with the lower risk trades because you can have the same payoffs. Okay, here's a trade where you put your stop. You took the trade here. You put your stop down here. Now this is actually a fairly large risk also, because you got to you do include the wicks when you put your stop in. Okay, you do include the wicks when you put the stop in here. So this is so if you took 2 here, okay, you would be getting out of 1 here, moving a stop to break even. And look at this ride here. These are big moves. This is the S&P. This is a move of 20. This is a 20-point move. And in our system with the exit strategy, you would have been out. Wow, you wouldn't have been out. You see this is in our system. This is not a signal. It looks like a signal, right? It's got a hesitation. Again, I'm only looking at the body. I'm not looking at this wick. It's got the hesitation and that. But you see the fact that it's straddling the moving average as opposed to being on one side. The conservative trader, like you and I as seniors, we don't want this trade. And why? Because the thrust, the energy comes on the crossing of the 8-bar exponential moving averages. Maybe I'm making that up about the energy, but this is the concept that I vision this at, and the concept that I think you'll think is true once you start working with this. So the idea is, is this a signal? Again, there are some traders, and if they lost on this one and then they lost on this one, they made on this one and they made big on this one right here also. So look at this move. And you would have been out till the end of the day. So look, I'm not cherry picking charts. I'm showing you a chart from a couple of days ago. Okay, and we also have a clear preserving exit strategy. Okay, and I want to show you one example of it. This is the gold contract of a couple of days ago, and here's the movement right here. A very clear signal, beautiful signal, right? These are the. I like to see this take out a bunch of highs here, but in this case it didn't. This would be a minimum position. I want to stop here and just say, just for 30 seconds, and emphasize the importance of position sizing. We seniors need to grab this concept, because the youngins, they just throw on positions when they feel like it. You should be able to look at your surroundings and take an A+ trigger, and then judge the number of positions, the position sizing based on what you see around you. The fact that this, I'm not looking at the RSI, and I'm not looking at, as you see, look, this is a very simple chart that I trade from. Okay, it's not a complicated chart, right? So it's very simple. It's a simple trading plan that works just as well, if not better, than all of those other systems I found. So here is a position here where I would have taken just a minimum 2 positions. It's a beautiful position, nice short risk. You take 2, you would have given out of your scalp here. You continue higher, okay? And now look what happens here. You have a giant bar. When you're this far from the moving average, this could really hurt you in apex by not taking your, sure, I mean, this could go up and it could be the best trade of the century, but more than not, 99 out of 100 times, this thing is going to come snapping back to some degree, okay? Because this is a moving average. It's average. It only makes sense that it's, so when you get this far from the moving average, if I was trading this, actually I did trade this particular position, and what happened was I let this bar close, and as soon as this bar, it started off higher and then started to come down. And as soon as it passed the high here and came down, I took out my profit right here, and I never looked back. Listen, I don't always get it right, but I remember this particular trade is why I'm showing it to you. And those who have our standard exit would have been out in this area right here, okay? Which is fine. You would have had a nice profit, whatever, but why give this away? See, this is the thing where the rule really helps you to preserve money. So a lot of times this will happen in the futures market. So pay attention, take the profit when it gives it to you. I just wanted to show you that, okay? So every trader is different. I want to give you the concept of nuances. Let me look real quick at the chat. And I'm not sure what the moving average was. We have different ones for that, and it's not really fair to those who are with me on this. But more than fair, I don't want to mislead you. It's different for different situations. I'm not sure what it was there. It's probably a high single digit. It was a high single digit moving average. Okay, hope that's good enough for you. Every trader is different. The danger of one size fits all. The concept of nuances. I believe I invented this concept with a book I wrote 2 books ago, and I have it ever since. A nuance is, I alluded to it before, but something in the trading plan that a rule that you can adjust to the basic trading plan that fits you and the way you like to trade and your personality. Some traders like to get out of a trade and move on. Other traders like to, if they have a nice profit, they like to see how far they can take it. But if you get a sell signal and you want to stay in, there may be a way to do that with one of the nuances and not add a significant amount of risk. So a nuance is it's for different personality types that need different plan elements and rules. The concept of nuance is optional rules, adjustments to fit individuals without adding undue risk. So it's a concept that there are 7 of them in the simple trading plan I'm going to show you. We're testing 2 more. It's ways that you can, exercise your patience or your greed in a way that's not going to hurt you, okay, and not give it all back like I showed you with Apex. So nuances address the psychological factor to reduce and eliminate potential human error. Now you may say, what the hell is that? I don't believe me. You only need 2 things when you trade. You need a good trading plan, and I'm showing you one, and you need the wherewithal, and you need to exercise your God-given capabilities to follow that trading plan, okay? So for passing the prop evaluation, I want to give you this offer, okay? I want to give you the 3 or the core loaded gun trading plan. Loaded gun is the simple trading plan that can be adjusted for prop trading, even more defined. Okay, so you get the core loaded gun simple trading plan. Okay, right now it's we sell for $19.97. They get videos, all of the rules that fit on one sheet of paper. This is a simple trading plan. You've seen a lot of it really right here, but you need to know how to exit and you need to know other setups and so on, and when not to take the trigger and when to take it. All of this very simple. It's not complicated. You don't have to look at moving numbers and miss something. This is a simple trading plan. That's what I believe in, and that's what my people believe in. Okay, because once you start, you'll never go back to all those lines. Okay, so you get the core loaded gun simple trading plan. You get all the nuances that I talked about, and if we have time, and you asked me to, I'll give you an example of a nuance. But again, there are short videos on each one, 10, 15 minutes each, just showing you the nuances. Okay, and we have a private Facebook group for loaded gun owners, and also but if you hate Facebook, I can show you how to get onto Facebook where they don't know who you are. But you know, I don't think that works for most people. It's a group, and it's there for you. Not a lot of people take it. Maybe a third of the people take it. Okay, certainly us seniors, a lot of us are not real excited about Facebook, but you know, it's there because it's popular now, and it's a place we can all hang out, and I check in on there on a daily basis. The monthly get-togethers we do every last Wednesday, which was yesterday. So you're going to see, you join today, and you can see the recording from yesterday, and our get-togethers. We all have our little Zoom boxes. We talk about how we've been getting along, some of the things that we found out that really could even improve. That second moving average that I showed you, I call it a guardrail. A guy named George, who's a concert pianist, who is one of our traders that trade with us on Loaded Gun. He showed me this, and he said he's been using it to keep him out of false triggers. And I'm telling you, it was the greatest. So I put it into the system. This is it. We're all working together on this, even though, you know, I put together the basics that are going to work. Why not look to improve it? Any good trading plan needs to be constantly checked and improved. Not because it doesn't work anymore, because things ebb and flow a bit. And if you can figure it out before it happens, all good. So in those monthly meetings, I talk about any updates, any experiences that we share, and of course it's recorded if you miss that. Now, Peter said, I'm not sure if you read this, but I'm now using Loaded Gun exclusively. Thought his problem was psychological, when in fact the system just didn't work. What he didn't realize is I put those nuances in, and that really helped him to follow the plan. He can't thank me enough. And Peter's a terrific guy. I can't thank him enough, to tell you the truth. I put this up because this is a recent testimony. I've got hundreds of them, but I bet him, if I've been doing this for 20 years in teaching. Person purchased, Jim purchased just about a month, 5 weeks ago, 6 weeks ago. And the following Thursday, so this was on a Saturday, so five days later, he wrote this. He says, I've been trading Loaded Gun, took the attached trade on my Top Step account today. Have a great holiday yourself. And he sent me the chart. I only show you this. I'm not going to go through this chart, but I will say to you that here's this. Let's see. Here's the trigger right here. Here was a losing position, right? A loser. We're going to have losers, but a winner. And this is what winners can. That's why we just keep trading, because when the winners here, and you saw, I didn't cherry pick these charts. They happen. Okay, a lot. Okay, so but I wanted to show you this. He started trading it 5 days after he purchased Loaded Gun. He's already using it. So just wanted to show you that it's a quick turnaround. I want to give you this bonus because I don't want you trading this unless you understand it. And again, it can be simple as ever to understand, but sometimes you can put the, as my father used to say, put the emphasis on the wrong syllable. Or if you didn't understand that, the emphasis on the wrong syllable. I want to make sure you have this down. And yes, it takes my time, but it's simple enough where we can go through in a half hour, 45 minutes with your basic understanding or misunderstanding of having seen the videos and maybe one of the recorded Wednesdays, or maybe attended a Wednesday. We get together on Zoom, and you can get together with me as many times as you want for the first 90 days. Okay, I want you to understand it. So as soon as you invest in Loaded Gun, you'll get an email with a calendar link where you'll be able to schedule a personalized one-on-one walkthrough with me. Okay, it says one professional, but this is going to be with me. and I'll proceed to learn a little bit about your trading background, advise you on how to get a quick start with your new purchase, maybe advise a nuance or two. And as you perfect running the plan, I'm going to be there if you need me as many times for one-on-one coaching to bring you along those first 90 days. Let's do this. It's a simple trading plan. And if I did it, you can do it. I know that sounds, sure, I've been trading for, but I am no genius. I am no genius. I just figured out that you need a plan and you need the mental capabilities, capacity to follow it. That's all you need. That's why people with half your intelligence are making money. And that's why you keep hitting your head against the wall. I think I'm smarter than this guy or this woman. Why is he making all this money? And I'm not, what's going on? I know I'm smarter. Well, you're not smarter in this particular case because you haven't given honor to the mental side of trading, or you haven't given honor to the process of passing a prop exam in the ways that I've shown you. Okay, so I want to give you and me and you, 90 days, okay? Anytime you want. And you have email access to me. And I want to give you this fast action bonus because again, this is good till midnight. The other coupon code I'll give you for the discount off the $19.97. That's good. That's good for whenever you want to use it for the next. Let's see, it's going to be at least a few days. Okay, so you'll have a few days. But this right here, this is good till midnight because I want you to. If you don't see the power of what I'm about to say, they say make sure your bonuses, your fast action bonuses, is almost better than the process. It's not true in this case, but it's equally as good because it's our flagship peak performance product, the Disciplined Trader Mastery Program. If you already own this, I'm going to give you a full year of the Disciplined Trader Mastery Program. And this retails, we sell it for $4.97. We don't discount it much because it's only $4.97. I don't want to be flippant about the price. It's $4.97. But you're going to get a year. If you already own it, okay, I'm going to extend it for another year. I want you to have the discipline because none of this is going to work, okay? And I don't want you to spend your money on discipline because you don't know if that's, I want to put it in your lap and I want to pound on you to take the short 7-8 minute meditation so that you can follow the system, pass the test, and start the stream of income. Okay, it's really up to you making the commitment, but I don't want you to come to me and say, oh, I just keep missing the thing. I have this fear of missing out. No, I don't want to hear that because you didn't do the meditation or you did. The Disciplined Trader Mastery Program is our flagship product. It's been around it originally sold for $2,000. It was 12 CDs. But once you digitize it and whatever, we were able to come way down on the price. And I want the world to have this, the world of traders. Okay, I'm giving it to you if you go for this. And again, this will eliminate things like the FOMO, hesitation to pull the trigger, lack of patience. You're going to need patience, overcoming losses, fear of losing, greed, revenge trading, whatever your issue is, over trading. Believe it or not, the last couple of months of last year, maybe it's you wanted to make your goal by the end of the year, but over trading was it took over from revenge trading as the most heard problem or issue that we were dealing with toward the end of last year. But whatever your issue is, we have the answer in the Disciplined Trader Mastery Program. So I want to give it to you for a year as part of this offer. Okay, so and it looks something like this. And if you do go for this, and I'd love you to concentrate on the core modules. Here's where the meditations are. They're only 7 or 8 minutes long. And listen, and don't say, oh, meditation, isn't that for, hippie? No. Hey, listen, we're all hippies anyway, probably. Most of us, right? Most of us seniors. Yeah, it's for hippies. For you, I'll say, yeah, it's we hippies. We need to meditate. It calms you, it focuses you, and it gets rid of that issue that's stopping you from following your trading plan. But I wanted to show you what some of this looked like, okay? Here is the entire offer. The Loaded Gun Simple Trading Plan, all the nuances, the private Facebook group if you want to use it, the monthly get-togethers where you get the recordings, and I want to give you the one-on-one unlimited coaching for 90 days, and you've got email. Sometimes it's not a meeting that you need. Sometimes it's just an email that you want to send me, and I'll respond to it quickly. And then the fast action bonus of the Disciplined Trader Mastery Program. You're going to get all of that and my guarantee. Here's where I take the risk. if after our first one-on-one, but within the first 30 days, I want to have that meeting with you, the first meeting, that what I call an onboarding meeting, where I learn about you, I suggest to make sure that you got the simple trading plan down. You can ask any questions. You know, you'll have the 90 days, but this first meeting is a real important one. I want to make sure you got it. And if you don't think, after this first meeting, you don't think that the loaded gun is for you, then I'll refund the purchase. I'm not a, you see, I talk too fast to be a very good salesperson. That's why I didn't like Payne Weber. So I wanted to, listen, the risk is on me. I don't want you to, I want you to look at the videos. I want you to draw the line in the sand and say, I can do this. I want you to step forward. I want you to make the commitment. I want you to make the purchase. I'll hold it in my escrow account or whatever. And then I want you to look at the videos. I want you to meet with me. By then, you're going to say, this is the best investment I've ever made in trading, okay? And you can't say that, refund the money. There's a lot of people, incidentally, who have a really good trading plan, but take some of the pieces that I've given you 1 or 2 pieces today, and employ that. They buy it, but they don't ask for their money back because they're employing some of the pieces that I use in this simple trading plan. So wherever you are, you've got my personal guarantee. Okay, so the loaded gun simple trading plan, where you get the nuances, the core, the Facebook, the meetings, okay, unlimited one-on-one coaching again, okay. I'm going to give that a value of $2,500, but it's more than that now at the turn of the year. And so, but we charge $19.97 for right now for loaded gun. I am going to cut that in half. I'm going to slice that by $1,000. So for you today, for the next few days, till midnight for the extra bonus, but till midnight today, $9.97 is all you're going to pay for all that you get here. The loaded gun, the 90 days of coaching, the nuances, everything. And here's the simple trading plan. You want to use the code their money, okay? And if you act, or you can just scan this cool thing that I made up. I feel like a tech guy now. And if you act before midnight, and I really want you to act before midnight, okay? Because if you're this close, do it and get this mastery program. I mean, get the Disciplined Trader Mastery Program, okay? And I'm going to give this to you. It eliminates the fear of losing, revenge trading, lack of patience, hesitation to pull a trigger, anything, sustaining discipline, over trading, whatever it is that's ailing you in your trading, and you know who you are. The whole package, $9.97. We can get to work as quickly as next week. I mean, you can buy this right now under the safety umbrella of my guarantee, and then all you have to do is then you can set up look at the videos, take you a few hours, and then you'll have your meeting with me next week. All right, I'm going to check the chat out. Well, I got it here. Thank you for putting that up there. I see the chat was David put up, overtrading cost me more than fees and commission that I made. Yeah, it's true. I'm gonna shake you on that, Mike. Please do this. Well, and I'm going to reach out and with my virtual hands and shake your virtual shoulders on this, because I've got a trick for overtrade. I'm going to give it to you in a second, whether I see you or not. Something we like to give our coaching clients. I can't help it. It works so well. I'm going to give it to you in a second. I want to check some of these other questions. Oh. Let's see. Hi, Norman. Hi, Norman. Got to run. Thank you. Thank you. I guess you ran already. Great advice. Time frame. I use the 5-day, but these work at any time frames. Okay. A lot of guys use the 2. A lot of guys use the 5. I use the 5, the 10. I won't buy a stock on a daily chart without looking at some of the things we do at the main triggers that we use. Okay. Yes. You can't leave a position open. Okay. Let me give you the. Are you still here? Are you still here? Let's see. Overnight trading. Who asked about that? Mike, are you still here? I just don't want to do it unless you're still. Oh, yeah. Okay. Still good. Okay. Here it is. Here's what you do. You take a. How many trades do you take? You know, how many trades do you usually take in a day? Just give me that answer, Mike. How many trades you usually take in a day? 10 to 12. Okay, then I want you to take 6 or 8 quarters. When I did this, I was on a real streak. I was using, when my wife gave me this idea, I was actually using gold leaf, not Krugerrands, but the Canadian gold leaves. That's how well I was doing at the time. But just take 6 or 8 quarters. Say you take 8 quarters, just coins, okay? And then I want you to take a coffee cup, an empty cup, and put it next to the stack of 8 trades. These 8 coins are the 8 trades that you're going to be limiting yourself to for the day. What it's going to do, and every time you take a trade, you take a coin and you put it in the cup and you let it clang, clang. It's kind of like a bell ringing. It does a number of things to you. It's a terrific exercise if you're an overtrader. We had a woman that was, we used to coach from Sweden, that was taking 50 trades a day. Was trading all day. This really, we had her down to 10 trades. I want to get you at least down to 6 to 8 trades, okay? Because you start to lose quality. So I want you to identify your A+ trades, and it's going to force you to do that, because now that you've made 2 trades, you only have 6 coin left. Or if you start with 6, you only have 4 trades left. Now you're going to get a little pickier, okay? And by doing this for a full week, you're going to see what happens. And what happens is you're going to wait for better triggers, okay? You're not going to overtrade because you have a limit, okay? Try it, Mike. If I never see you again, and I hope I do, sometimes you do 30, yeah, I know what you're saying, you can get away, but you got to commit to the coins and make them, you know, if you got Krugerrands in the safety deposit box, bring them out. You want value. I like value too. Or you can get, you know, US silver dollars or something cool, but make those coins cool, something cool. I like to make them cool and drop them in. You're going to wind up, it will, and it's going to cure your overtrading, because you're going to be a person now that realizes that it's not about how many trades you take. It's about the quality of trades that you take. And it starts with a great trigger. This is important. It's important, especially for seniors. The further you get from a trigger, the less effect the trigger has on the price. Okay, you get 6, 7 bars from the trigger, that trigger is almost useless already under most conditions. So you want a trigger that takes off quickly, the first bar or 2. Okay, and you're going to wind up being much more conscientious of what you take when you do the coin trick on yourself. So I hope you enjoyed that, because it's kind of fun to talk about, and damn it, it works. I mean, if it works for our Swedish woman, it's going to work for you. I mean, she traded a lot, and she's doing really great because of this. Sometimes it's one thing, you know, trading problems, they can be like dominoes. And if you can, that's why I want you to have the Disciplined Trader Mastery Program in this offer, because sometimes if you take care of the fear of losing, for instance, all of a sudden you become more disciplined. You all of a sudden don't lack patience, because you don't fear losing, and you don't run after trades, because you know sometimes all the problems can fall like dominoes. Sometimes they can expose your real problems. You think it's fear of losing? No, it's not. It was lack of patience all along. So whatever you uncover, you're going to have the tools to correct that in the Disciplined Trader Mastery Program. I'm 5 minutes over, but I have the privilege of doing that because I'm the last speaker. So if you've got any last questions, tell me now, because David's been around since 10 o'clock this morning. So I'll take one more question if you have it. Otherwise, I really hope you take advantage of this tonight. I want to work with you. This is a fun and profitable endeavor if you get it right. And for seniors, it's damn perfect. I'm going to give you the system that works, and then I'm going to make sure that you train mentally to do it, and then we're going to go after it. Okay. So any other questions? We have it. Otherwise, just follow that leader. You know what? Did I have, you know, and if you do none of this, I wanted you to go to my homepage right here, thedisciplinedtrader.com. If you go to the Disciplined Trader, at least get on my list. Okay, receive our weekly 4-minute drill for you. You won't see an offer like I'm making right here, because I made the same offer the other day, and I'm almost to the limit of my time. So, but if you go to the discipline training, you'll see that I've made 200 4-minute drills. You'll get them. You'll get them one a week. Just signing up for my list. Okay, everybody. I hope you take advantage. Oh, I see somebody's going to start taking advantage. I can look at the shopping cart. Well, thank you. I'm going to hang on one second. I'm going to come aboard. There I am. It's a workout shirt. Worked out before. Thank you for coming. Thank you, David, for having me. Let's work together. If this sounded good, if I sound like a pretty good coach to you, let's get it done. Let's do it.